We had the NSE All-Share Index inch up a further 40 basis points yesterday, and it seems that markets at this stage still relatively calm ahead of the elections tomorrow. Or is it a matter of all the negative possibilities already having been priced in here?
Absolutely. You know, as you mentioned, even though the market was up by 40 basis points yesterday, the market has generally been calm. And obviously, we're attributing this to the upcoming presidential elections and elections that are taking place generally across all levels in Nigeria. So that investors are a bit cautious. A lot of them are waiting on the sidelines, and hopefully as things become clearer and as the elections take place, we should see some additional activities in the market.
While we wait for those elections to come and go, banks still keeping us busy in the banking sector. Yesterday, sentiments were split amongst the top tier players. We had the negative First Bank turning bearish after the release of its full year numbers. What did you make of market reaction, and what were your overall impressions of those numbers released?
I think the First Bank numbers was relatively good. If you look at that, the numbers they released yesterday compared to last year. Their revenue or top line was up quite strongly by over 200 billion, and generally we think that the bank has to a very large extent recovered from some of the shocks that took place last year. I think we're beginning to see them move back into strong profitability positions. They even made an additional 1% provisioning for their performing loans, which obviously they had the option of waiving those provisions. So that goes to show, I think, their strong liquidity position.
Yeah. Of course, we had First Bank and Stanbic, the only banks that chose not to avail themselves to that, of that waiver of a 1% general loan loss provision that was granted by the CBN. What have you made of the move, looking at the kind of implications it's had on earnings?
I think that for First Bank, the implication has not been material. The provision was just over 14 billion, which is a small percentage of the total revenue. But I think what the management has said is that, they're taking an additional prudent step to ensure that, investors are confident about their liquidity position, and, they want to stay ahead of the curve in terms of making an additional 1% provision, whereas, the other banks have taken the options of not making that provision.
So why such a negative reaction, Shuaib, to those results? Was it merely on the back of a disappointing divvy payout there?
I think it's more a macro issue, and what I mean by macro issue is the elections, really. I think that even though we've seen a few banks come out with results that have been okay or fairly good, I think that generally, overall, investors are more concerned about the elections that are coming up. I mean, the market in Nigeria in the first 4 weeks of this year was up by 12%, and we saw all that fritter away as a result of, obviously heightened political risk because of concerns from, Ivory Coast and the Middle East and North Africa crisis that we're seeing as well.
Mm-hmm. Well, as I said earlier, I mean, we had that disappointing dividend payout as well. UBA falling back after its announcement. It proposed a 5 kobo dividend and a bonus for 144. What are you making when it comes to expectations that the market's setting around what it's looking to get back from the healthy players in the banking sector?
I think you're right. UBA's result was disappointing. If you look at their PBT and PAT, it was extremely, below expectations. So obviously that's been disappointing. But their top line, on the upside, their top line grew to, from around about just under 180 billion to around 185 billion naira for financial year 2010. But obviously, I think that there are two main issues that have affected UBA. We've seen an aggressive expansion across Africa for the company. Obviously, that's impacted negatively on their bottom line. And then secondly, we believe that they were not able to participate in the first round of the NPL sale to AMCON because obviously their NPLs was not margin loan related. But we think that, in the second round, they should be able to participate, and that should, improve their financial position.
On the flip side, we had Zenith Bank amongst the top tiers seeing some positive movement yesterday. That share price up 2.7% by the close of the session. Your view on Zenith at the moment?
I think Zenith is a good bank. Their liquidity position is pretty strong. Their management team is quite strong as well. I think that their top line as well as bottom line was one of the impressive ones as well. In addition to GTB as well. So Zenith Bank generally continues to be one of investors' favorite banking stocks. And we see that continuing because the company is well run.
Well, certainly making headlines here in South Africa is this potential tie-up that we're looking at between South Africa's First Rand and Sterling Bank. Market reaction on that end to the news. Run us through what you're making of it, because we saw some negative reaction to the share price here in South Africa on First Rand side, but over on that end, Sterling Bank rising close enough to that maximum 5% limit.
I think overall, it's a very good development for Sterling Bank as well as First Rand. Obviously, Standard Bank has come into Nigeria aggressively through Stanbic IBTC, and it's been a fairly successful strategy. I think that First Rand is looking to sort of put that sort of structure in place. The transaction is around between $300 to $400 million. That's how much they're looking to invest in Sterling Bank. And we generally think that that's a good opportunity for First Rand, because Sterling Bank has close to 100 branches across Nigeria, and we see the development as a positive one for the markets.